Welcome back to Pest Control Unlocked. I'm Konstantin Schwartz. Before we dive in, just a quick disclaimer. I currently hold no stock in Ecolab, Rollins, Rentokil, or any other publicly listed company servicing the pest control industry. I am a former employee of Rentokil, and any information I share regarding these businesses is strictly based on publicly available data, such as earnings calls and annual reports. The opinions expressed on this show are entirely my own and should not be construed as investment advice. So, once we've got that out of the way, let's get started. Today, we're breaking down Rentokil Initial's full year 2025 results. And we're doing it exactly in the same format that I used for Ecolab and Rollins: headline numbers, operating drivers, strategic risks, and the strategic verdict. With Rentokil, the story is never just how was the quarter. It's this: can they turn the Terminix acquisition into an undisputed North American powerhouse without breaking their growth along the way? Because what Rentokil is attempting right now is still the biggest strategic bet in the industry: scale, density, and integration at a level pest control has never seen before. Here are the three numbers that actually defined Rentokil in 2025. Number one, group revenue was up 3.8% to $6.9 billion, with organic growth of 2.6%. But importantly, management emphasized acceleration. Second half organic growth jumped to 3.5%. Number two, profitability improved. Adjusted operating profit was up 5.4% to just over $1 billion, and their margin ticked up 30 basis points to 15.5%. Number three, and arguably the most important metric for Rentokil right now, cash. Free cash flow was up 24.5% to $615 million, with a massive 98% conversion rate. That combination, improving growth in the second half, expanding margins, and generating very strong cash, is what gives them the breathing room to keep investing in North America while pushing toward their target of 20% plus North American margins by 2027. Now, let's talk about North America, because that is the center of gravity. North American revenue grew 3.2% to $4.3 billion, with organic growth of 2.3%. But here's the key progression they desperately wanted the market to hear. In North America Pest Control Services, Q4 organic growth improved to 2.6%. That is up from 1.8% in Q3 and way up from a flat 0.1% in the first half of the year. That is not back to industry leading yet, but it is a clear directional change. So what is driving it? Three things. One, lead flow is recovering. H2 lead flow rose 7% as Rentokil pivoted from poor paid leads to targeted organic and regional brand growth. Two, the satellite branch strategy is working. They opened 150 satellite branches in 2025, are scaling to 220 this year, and targeting 800 total branches network-wide. One of the best soundbites from the call is this: branches with satellite hub attached are generating more than double the lead flow of those without. That frames density not as a corporate slogan, but as a measurable lead engine. And the third point is that accountability is moving back to the branch. Sales accountability returning to branch, a Rollins-style pivot toward local execution and measurable discipline. Andy Ransom's core message wasn't mission accomplished. It was a tactical pause to protect growth and minimize frontline friction. 2024 migrations delivered synergies but traded off growth. Branch closures and route changes simply created too much friction for the customer. So the new message is essentially more brands, more branches, keep systems longer, simplify pay plans. Concretely, this means instead of keeping just 9 regional brands, they plan to support around 30 regional and local brands. They are extending the life of legacy IT systems using a new branch BI scorecard and data layer, giving field leaders a single pane of glass reporting view without forcing a full back-end system migration. Pay plans are now decoupled from IT migrations. The rollout sequence is managers, then sales, then techs, with current staff allowed to opt in or stay grandfathered through 2027. Strategically, the original integration plan became a growth headwind, and Rentokil is now choosing momentum over purity. On cost and efficiency, the call was unusually specific. They delivered $25 million of in-year savings in 2025. This included a headcount reduction of over 500 roles, 430 roles offshored, and a third-party spend consolidation. They also reallocated $20 million of marketing spend away from bad leads into higher efficiency channels. The CFO framed their Fuel for Growth model clearly. Take the 2024 cost base, remove $100 million by the time they report 2027 results, and selectively reinvest that money into pricing capabilities, data, marketing, and branch density. Now, we have to talk about termites because it is the shadow hanging over this story. They increased the termite provision by $201 million across the year, including $122 million in the second half alone. The drivers: more complex litigation claims than in 2024. The settlement of large legacy commercial claims above historic averages, and an inflation assumption increase from 2 to 3.2% due to the rising costs of legal defense and materials. The actual cash cost was $95 million in 2025, and they expect a similar cash drain in 2026. The bottom line: the termite issue doesn't break the core strategy of density and execution, but it does ruin clean financial comparisons with Rollins, and the market will keep hammering them on it until those costs shrink visibly. Finally, this is where Rentokil quietly separates itself from the narrative that it is only a consolidator. Internationally, they added 100,000 Pest Connect devices in 2025, bringing their total to over 600,000. In the Netherlands, over 50% of the commercial business is now connected. But in AI, they are being incredibly aggressive. They rolled out Google Gemini to over 63,000 colleagues. They launched an in-house Rat GPT portal with over 100 AI agents in use or development. Two quick pilot examples. The first one: agentic prospect prioritization, an AI model scoring leads based on conversion likelihood and future value. And the second, a technician assistant, a hands-free system speaking to techs as they approach a site, giving them the history, the last infestation, data, billing status, and recommendations. Here is the key strategic admission from the Q&A session. They acknowledge they have been weak at deploying commercial connected solutions in the US, but they are making it a massive priority for 2026. So if Ecolab is devices at scale and Rollins is operational excellence, Rentokil is trying to become density plus execution plus tech enablement at scale. So what is the strategic verdict on Rentokil for 2026? I would frame it in three parts. 1. Momentum is improving. The lead flow and satellite branch strategy are showing tangible operational signals leading to organic improvements. 2. The integration strategy has matured. They've moved from forced standardization fast to reduce disruption, protect growth, and standardize through data. 3. The risks are still out there. Termite litigation and cost inflation remain a meaningful overhang, and the US still hasn't fully captured the connected innovation advantage they already have internationally. But net-net, 2025 was about stabilization and rebuilding the growth engine. 2026 will be about proving that this model can scale back to industry-level growth while marching towards those 20% plus North American margins. This is Pest Control Unlocked. I'm Konstantin Schwartz. Thank you for listening.